Welcome back to the deep dive. If you've been paying attention to the conversation around technology and the economy, you have probably heard endless speculation about generative AI replacing jobs.
Oh, absolutely. It's everywhere. AI is coming for coders, artists, call centers, you name it.
Right, truck drivers even. But the thing is, up until now, a lot of that conversation has been, dominated either by Silicon Valley hype on one side
hmm
or kind of fear-mongering anecdotes on the other. The core question still remains. What does the hard data, the rigorous, large-scale empirical data actually tell us about the impact, especially on the modern white-collar workforce?
Yeah, moving beyond just stories and speculation.
Exactly. So today we are putting the speculation aside. We're really tearing into a preliminary research paper that provides what might be the clearest empirical evidence yet of exactly where AI's first sharpest cut has landed in corporate America.
And as we'll get into, it's not just about replacing low-skill work, which is kind of the classic story.
No, it seems to be fundamentally altering the entry point to the entire career system. It's quite a structural shift they're pointing to.
It really is.
Okay, let's unpack this. We're focusing on a preliminary paper published just August 2025 by Said Hosseini and Guy Liftinger. It's titled Generative AI, a Seniority-Biased Technological Change.
And that title, right there, is the crucial starting point. It signals what they're looking for. This isn't the classic idea of technology hitting low-skill labor versus high-skill labor, the stuff we've studied for decades.
Right, skill-biased technical change.
Exactly. This paper focuses specifically on seniority. The idea is that the technology itself is disrupting the career path, the ladder.
How do they test that? What kind of data are we talking about?
Well, to test this hypothesis, they got access to an absolutely massive pool of granular real-world data. We're talking U.S. resume and job posting data, primarily from LinkedIn and Revelio labs.
Okay, so real worker movements, real job ads.
Yes, and when we say massive, we mean robust enough to actually move past conjecture. They tracked nearly 62 million unique workers.
Wow, 62 million.
Yeah, across about 285,000 firms, spanning a full decade, 2015 right up to 2025.
So a huge window looking at before and after the recent AI boom.
Precisely. The mission was pretty straightforward. Use this immense data set tracking, every hire, promotion, exit to figure out if this recent spread of generative AI constitutes a specific phenomenon they're calling seniority-biased technological change, or SBTC.
SBTC, okay. And the findings, as you mentioned, seem quite specific enough maybe to shift how individuals should think about planning their education and careers.
I think so, and it certainly should force a rethink among policymakers, too, about the stability of the whole white-collar labor market.
So for you, our listener listening today, our deep dive is really structured around answering four absolutely critical questions that come out of this paper about this structural shock to the career ladder. First, when did this really profound divergence between junior and senior jobs actually kick off?
Yeah, the timing.
Second, how do we know it's AI adoption specifically? How do we disentangle that from, say, just generic economic malaise or some kind of lingering post-pandemic weird?
The causality question, always tricky.
Crucial. Third, is this impact happening because of mass layoffs? Are people getting pink slips? Or is it maybe a more strategic, slow motion thing, like just a slowdown in hiring?
The mechanism,
Yeah.
basically. How is the change happening on the ground?
And finally, fourth, which industries are feeling this most? And maybe the most surprising part, which specific educational backgrounds seem to be the most vulnerable to this shift?
Yeah, that educational finding is really something.
Okay, so to really grasp the size of this shock, we first need to establish what normal looked like before the whole generative AI explosion, right?
Absolutely. You need that baseline. The researchers did this using aggregate time series data, just looking at overall employment levels across their huge sample from 2015 to 2025.
And how did they define seniority in this context?
They were quite meticulous about it. They categorized junior roles as basically entry and junior level workers. Think of those as the necessary foundational training positions in a company.
Right, the first couple of rungs on the ladder.
Exactly. And then senior roles were defined as associate level and above. So that covers the bulk of experienced individual contributors, managers, executives, and so on.
Got it. So what did that baseline period look like, say, 2015 up to mid-2022?
Well, if you look at the employment growth rates for both junior and senior roles during that period, they were remarkably similar, almost identical, really.
Okay.
They tracked each other very closely, both rising steadily. It reflected, broad corporate expansion and what looked like a pretty healthy talent pipeline. Companies were investing in experienced people and bringing in a steady stream of new recruits.
So growth across the board, maintaining the structure.
Pretty much. A predictable system for handling foundational tasks and feeding that internal promotion pipeline.
Okay, but then you said mid-2022. Here's where it gets really interesting, as you put it.
Yes, that stability it shattered. Right around mid-2022, this is the inflection point. The trend lines start to diverge dramatically. Some commentary called it the opening scissors.
Opening scissors, I can picture that. So what happened to the senior roles?
The senior employment line representing those established, experienced workers, it barely flinched. It just kept going up. Steady, strong expansion. It suggests continued high demand for that high-value experienced talent.
Okay, so seniors are fine. What about the juniors?
That's the dramatic part. The junior employment line first just flattened out completely. All growth stopped. And then, starting in early 2023, it began a clear, sharp, and sustained decline.
Decline, not just flatlining.
A real decline in overall numbers for junior positions.
Wow, and the timing there, late 2022, early 2023.
What's absolutely fascinating and kind of spooky is the perfect chronological alignment. This divergence kicks off exactly when the large-scale public diffusion of generative AI tools really began. ChatGPT hitting the mainstream late 2022, other tools following quickly in early 2023.
So the data suggests that within months, literally months, of these tools becoming widely available, the corporate appetite for entry-level workers just seemed to fall off a cliff.
That's what the aggregate picture strongly suggests. And if we connect this to the bigger economic picture, this kind of divergence screams structural shift, not just, a cyclical recession.
Right, because if the economy were just weak, or maybe dealing with a post-COVID slump,
you'd expect demand for both junior and senior workers to soften, wouldn't you? Or maybe you'd even expect companies to cut the more expensive senior workers first.
Yeah, that makes sense.
But that didn't happen here. We see this continuous, robust demand for senior talent, while simultaneously the demand for juniors just collapses. It points to something specific changing the value proposition of those entry-level roles.
And is there other data out there that backs this up, like beyond this specific study?
Yes, there is external validation. We see this mirrored in some official labor statistics.
Yeah.
Since late 2022, the unemployment rate specifically for recent college graduates, think age 22 to 27 with a bachelor's degree, that rate has been rising sharply.
Okay, recent grads specifically.
But here's the kicker. The unemployment rate for all young workers in that same 22-27 age group, including those without a college degree, has remained remarkably stable over the same period.
Huh. So it's not just young people struggling, it's specifically college-educated young people entering the workforce.
Exactly. It indicates a really deep, targeted shock aimed squarely at the highly educated entry-level worker. And if you think about their typical job duties...
Like preliminary research, basic coding, maybe summarizing documents.
Precisely. Those routine cognitive tasks are exactly what the current generation of AI is getting very good at automating.
Okay, so the macro data shows this really suspicious timing, this divergence happening right as Gen AI takes off. But proving AI caused it is the next big hurdle, right?
Absolutely. Correlation isn't causation, as they say. The core challenge for the researchers was to rigorously separate the effect of AI adoption from, well, anything else that might be happening to a firm, like maybe a firm just happened to reorganize, or it was in a sector hit by something else entirely.
So how did they isolate the AI effect?
This is where their methodology gets really clever, I think. They moved beyond just asking firms in surveys, are you using AI? Which can be pretty vague.
Yeah, everyone says they are.
Right. Instead, they created what they called the AI integrator proxy. This is defined pretty specifically. They looked for firms that posted job vacancies seeking workers whose main role was clearly to implement or operate large language model, LLM-based systems within the company.
Ah, so not just casual users, but companies actively hiring people to build this stuff into their workflows, putting money behind it.
Exactly. They were looking for companies actively trying to stitch AI into their internal processes, not just, playing around with ChatGPT for fun.
And maybe we should pause quickly. LLM-based systems. What kind of keywords signal that kind of serious integrator role in a job posting?
Good point. They started with this enormous pool of job postings, nearly 200 million of them.
Wow.
And they filtered it using terms that signal real implementation. Things like prompt engineering, which is, the skill of talking to the AI effectively.
Right.
LLM itself, obviously. And some crucial technical terms like ARG, which stands for Retrieval Augmented Generation.
ARGI. What's that, basically?
ARGI is essentially the tech that lets the AI connect securely to a company's own internal data its documents, its databases. That makes the AI's output relevant and specific to that firm, not just generic stuff. It's a sign of serious integrated use.
Okay, so finding postings with terms like ARGI, prompt engineering, LLM integration, that suggests a firm is really trying to make AI part of its operations.
Yes, those keywords signal serious active implementation. So they filtered those nearly 200 million postings down using these kinds of terms. But then they took another crucial step.
What was that?
They used a classification AI tools like GPT-4 Mini apparently to actually read the filtered job descriptions and confirm that the role was indeed focused on integration and implementation.
Ah, so using AI to verify the AI jobs.
Kind of meta, yeah. But it helped filter out, say, generic machine learning roles or jobs at companies producing AI rather than using it internally, or just roles mentioning AI casually. They wanted the adopters, the integrators.
And how many firms ended up meeting this strict definition?
After all that filtering, it was actually a pretty small number.
Mm-hmm.
Only 10,599 firms. That's about 3.7% of their total sample. But these firms are the critical ones.
A small but potentially very influential group.
Exactly. And the timing of when these firms started posting these integrator jobs is the key piece of evidence connecting it back to the macro trend.
What did the timing show?
Before 2023, the number of firms newly meeting this adopter definition each month was really low, only about 30 per month, kind of lukewarm activity.
Okay.
But starting right in the first quarter of 2023, that count just surged. It shot up, peaking at 456 new firms posting these kinds of jobs in the single month, August 2023.
Wow, a huge jump, more than tenfold.
A massive spike. And this explosive timing aligns perfectly. The moment these firms started actively hiring AI integrators lines up exactly with the moment that overall junior employment started its distinct, steep decline that we saw in the macro data.
So these specific firms weren't just talking about AI, they were aggressively hiring staff to put it into operation, and that action coincided precisely with the downturn for junior roles overall.
That's the connection they make. And it helps to look at who these adopter firms are because they're systematically different from the non-adopters.
Okay, what characterizes them?
Well, first, they're much larger. The adopters average nearly 500 employees, compared to just about 100 for the non-adopters in the sample.
So bigger, more established companies leading the charge.
Seems like it. They're also significantly more senior-intensive already. About 58% of their existing workforce was classified as senior, compared to only 45% for non-adopters.
Interesting. So they already had a richer pool of experienced talent.
Yes, which might make it easier to integrate AI or give them more reason to automate junior tasks. It confirms that this kind of AI adoption, at least initially, is happening in large, sophisticated firms, likely with deeper pockets and these existing experienced talent pools.
What about industries? Where are they concentrated?
Heavily concentrated in knowledge-intensive sectors, as you might expect. About 36% are in information that includes tech, media, data services. Another 25% are in professional services, think consulting, legal, accounting firms.
Makes sense. Those are areas where cognitive tasks are central.
Exactly. And one more thing. They also tend to recruit more heavily from elite universities, tiers 1 and 2 in the studies classification.
Okay, so taken together, large, senior-heavy firms in knowledge sectors hiring from top schools are the ones aggressively integrating AI, and this happened right when junior hiring started to fall.
That's the picture. It really solidifies the idea that this disruption is centered in that high-skill, white-collar, highly educated space driven by these specific adopting firms.
All right, so we've got the suspicious timing established with the macro data, and we've identified this specific group of AI adopter firms who seem to be driving the change. Now, the researchers needed to do the heavy lifting statistically, right, to really prove causality.
Exactly. They needed to formally compare what happened to junior and senior employment in these adopter firms versus the non-adopter firms, specifically after that AI diffusion point in early 2023.
How did they start that comparison?
They began with a standard tool for this kind of research, differences analysis, often called DID.
Did. Okay.
The first step in DID is crucial. You have to show that the groups you're comparing were similar before the change happened. For juniors, they found that the essential parallel pre-trends condition held true, meaning that before 2023 Q1, the employment trajectory, the growth path for junior workers in the firms that would later become adopters looked statistically identical to the path for juniors in the non-adopting firms.
Okay, so the groups were comparable before the AI boom really hit the adopters. That validates the comparison.
Precisely. It proves they weren't already on different paths for some other reason. But then came the shock right after 2023 Q1.
What happened in the DD results?
The junior headcount at the adopting firms fell sharply relative to the non-adopters. Over the 6 quarters following 2023 Q1, the cumulative decline reached a pretty substantial 7.7% relative to the control group, the non-adopters.
7.7% fewer juniors in adopting firms compared to similar non-adopting firms over just 18 months.
That's the finding for juniors. Now, crucially, what about senior employees in those same adopting firms?
What did the D show for them?
No such decline. Senior employment in the adopting firms just continued a steady upward trajectory. It looked pretty much the same as senior employment growth in the non-adopting firms, or maybe even slightly stronger.
Wow. Okay, so adopting firms expanded their senior staff, or at least kept them growing, but shed their junior staff relative to firms that didn't adopt AI.
That's what the DD suggests. Adopters kept hiring or retaining seniors while reducing their junior intake compared to the control group.
A 7.7% divergence in junior headcount over just 18 months, concentrated in these large adopting firms. That feels significant.
It is significant, but, a skeptic could still argue, right? Maybe those AI adopting firms just happen to be concentrated in sectors that hit a rough patch unrelated to AI, or maybe they face some other specific shock, like a big management change that just happened to force them to cut junior staff disproportionately.
Right. How do you isolate the AI impact from all that other random firm-specific noise? That seems really hard.
It is hard, and that's a critical question. That's why they didn't stop at DD. They used an even stronger tool from the econometric toolkit, the triple difference analysis, or DDD.
Triple difference. Okay. How does that work? How is it stronger?
The DDD model introduces what are called firm-by-time fixed effects. Think of it this way. The DDD compared, say, juniors in adopter firm A to juniors in non-adopter firm B.
Okay.
The DDD does something more refined. It compares juniors to seniors within adopter firm A first. It looks at that internal ratio. Then it compares how that ratio changed over time in firm A to how the junior-senior ratio changed over time in non-adopter firm B.
Ah, I see. So you're comparing the change in the internal structure of the adopter firm to the change in the internal structure of the non-adopter firm.
Exactly. It allows them to control for literally any shock that was unique to firm A at a specific point in time, as long as that shock affected juniors and seniors somewhat similarly within that firm.
Like if firm A had a bad quarter and decided to lay off 10% of everyone.
The DDD cancels that out because it's only looking at the relative decline of juniors compared to seniors within that very same firm. It isolates the seniority bias itself, stripping out firm-wide ups and downs.
That makes the finding much more robust then. You really are comparing apples to apples within the same basket, or the change in apples versus oranges within the same basket over time.
Precisely. It's considered a much stronger test for this kind of question. And the results from this strongest possible comparison, they confirmed the pattern, but the magnitude of the effect was even more stark.
Really? What did the DDD show?
But before 2023 Q1, the junior to senior employment ratio within those firms that would become adopters was stable, pretty flat. But after the AI boom started, that relative employment of juniors compared to seniors within the adopting firms plummeted by a staggering 12%.
12%. That's a huge structural reduction in the relative share of junior roles within these specific firms.
It really is. For listeners trying to visualize that, imagine a company of, say, 1,000 people. If they previously had maybe 250 juniors and 750 seniors, a 12% relative decline means they effectively shrunk that junior pool by about 30 people relative to the senior staff they kept, or potentially even hired more of.
Just shifting the internal balance dramatically away from entry-level roles?
Exactly. This DDD evidence is really powerful. It moves us far beyond just speculation or simple correlations. It establishes, with pretty strong econometric rigor, that generative AI appears to be acting as a seniority-biased technological change.
So it erodes the demand specifically for new entry-level white-collar roles, the ones doing those foundational cognitive tasks.
Right, while simultaneously sustaining, or maybe even accelerating, the growth in senior employment within the same firms. The analogy they use is perfect. The career ladder isn't necessarily broken, but it seems the bottom rungs are being systematically removed by the firms themselves as they adopt this technology.
Okay, so that 12% relative decline in the junior to senior ratio within AI adopting firms is confirmed. The next really crucial question then is how? How is that reduction actually achieved on the ground?
Yeah, the mechanism. Was this, an economic tragedy unfolding with mass layoffs? Were firms suddenly showing their existing junior staffs the door because AI could now do their jobs cheaper or faster?
Or was it something else, maybe a more strategic long-term shift in how they manage their talent flow?
Exactly. And this is where decomposing the workforce changes into the actual flows hires. Separations, which includes both firings and people quitting, and promotions becomes incredibly eliminating. And frankly, maybe a bit reassuring for anyone currently holding an entry-level job.
Okay, so what did the data on flows show? What was the main driver?
The paper's table 2 provides the answer pretty clearly. The primary mechanism is overwhelmingly hiring contraction.
Hiring contraction, so just hiring fewer new people.
Yes. After 2023 Q1, these AI adopting firms hired on average 3.7 fewer junior workers per quarter compared to similar non-adopting firms.
3.7 fewer hires per quarter. How big is that relative to their usual hiring?
Well, to put that 3.7 figure in context, the analysis suggests these firms were typically hiring around 17 or 18 juniors per quarter before 2023. So cutting 3.7 hires represents roughly a 22% reduction in the volume of junior hiring specifically for these AI adopters.
Wow, a 22% drop in bringing new juniors through the door. They really turned down the talent spigot for newcomers.
Abruptly and sharply. That's what the data points to. If you're graduating college in, say, 2023 or 2024 and looking for your first role in one of these large, sophisticated AI-adopting firms.
Your chances of actually getting hired just dropped by more than a fifth compared to someone graduating just a year or two earlier.
That seems to be the direct implication of this finding. Now, let's talk about separations. People leaving the firm, either fired or quitting. What happened there?
This is the layoff question. Did separations spike for juniors in these firms?
This is the somewhat good news, at least for existing staff. Junior separation rates actually decreased slightly among the adopting firms relative to the non-adopters.
Decreased, not increased.
Yeah, decreased slightly. The effect was small, maybe less than one worker per quarter difference. But the crucial finding is that separations were not elevated. Firms were not, on the whole, laying off their existing junior staff at higher rates due to AI substitution.
Okay, so the headcount reduction, that 12% relative drop, it's driven almost entirely by a sharp slowdown in new entry, in hiring newcomers.
That's the conclusion. Firms seem to be closing the door to new entrants, not showing people the door who are already inside.
But hang on, are you sure those aren't just, cleverly disguised layoffs? Maybe firms called it strategic restructuring or claimed it was performance-related separations, but they just happened to target the newest, youngest staff who might be doing the tasks AI replaces.
That's a fair challenge and something researchers always have to consider. However, the overall pattern in the data doesn't really support that interpretation as the primary driver.
Why not?
Well, if the main mechanism was simply restructuring disguised as layoffs, you'd still expect total separations to jump significantly. Maybe even for senior staff, too, if it was a broad cutback. But we see junior separations actually going down slightly relative to the control group.
Oh.
The implication seems to be that junior workers who are already inside the firm possess valuable assets. They have firm-specific knowledge, they've built internal networks, they're integrated into existing workflows. They're actually far more productive and valuable than a brand new hire who needs to learn everything from scratch.
So AI might enhance the productivity of those existing junior workers.
Exactly. It helps them do their current job better or faster. But it seems to directly substitute for the tasks that were previously given to the newest recruits, the ones who hadn't yet built up that firm's specific capital.
That makes sense. So AI leverages existing internal talent, but replaces the need for raw, new talent at the very bottom.
That seems to be the dynamic. And this idea is further supported when you look at promotions.
What did the data show about promotions for juniors within these adopting firms?
Interestingly, promotions of existing juniors into senior roles actually increased slightly in the adopting firms by about 0.4 promotions per quarter relative to non-adopters.
Increased. So the juniors who were already there and weren't laid off actually got promoted faster.
It suggests a potential silver lining, yes. For those who manage to get their foot in the door and survive that initial period, their career path might actually accelerate.
Why would that be?
The interpretation is that AI takes over the more routine, grunt work parts of the junior role.
Yeah.
The stuff that used to take up a lot of time and maybe slow down the learning curve for higher level skills.
Like the tedious data cleaning or writing the first draft of a standard report or handling basic customer inquiries.
Exactly. AI substitutes for those routine cognitive tasks. This reduces the need for lots of new recruits who traditionally did that basic work just to learn the ropes. But for the juniors already there, AI acts as a kind of leverage tool.
How so?
It potentially frees them up, elevates their existing experience, and pushes them faster towards learning and performing the higher level, more complex tasks, the ones that still require human judgment, synthesis, and maybe client interaction.
So firms are effectively using AI to accelerate the development and promotion ladder for their incumbent junior talent.
While simultaneously removing the need for the very bottom rung where completely new entrants used to start, it's a fascinating dynamic. Substitution at the entry point, but complementarity and acceleration for those already inside.
Okay, so the main story is AI adoption leads to a sharp drop in junior hiring, but not mass layoffs and maybe even faster promotions for insiders. But you mentioned earlier this impact isn't the same everywhere, right? The paper breaks down where the seniority bias is hitting hardest.
Absolutely. The impact is far from uniform, and looking at this heterogeneity, this variation, provides really crucial insights, especially if you're trying to plan your own education or career path right now.
Where did they look for differences?
They explored heterogeneity across two key dimensions. First, by industry, and second, perhaps most surprisingly, by the educational background of the workers.
Okay, let's start with the industry breakdown. Where were the effects strongest or weakest?
So figure 5 in the paper lays this out. One consistent pattern jumps out immediately. Senior hiring remains pretty robust, staying near or even above zero change relative to non-adopters across pretty much all sectors they examined. The demand for experience holds up.
Okay, seniors still in demand everywhere. What about the junior hiring cut?
That's where the variation is huge. The single largest reduction in junior hiring occurred in wholesale and retail trade.
Wholesale and retail. That's a bit surprising. I might have guessed tech or finance first.
It is interesting. In adopting firms within wholesale and retail, junior hiring absolutely plunged by nearly 40% relative to their non-adopting counterparts in the same sector.
40%. That's almost half the junior hiring volume gone in those adopting firms. Why there?
Well, think about the kinds of junior white-collar roles in large wholesale or retail operations. They often involve a lot of high-volume, fairly routine cognitive tasks. Things like reconciling inventory data, doing preliminary sales data analysis, handling routine communications with suppliers or vendors, maybe initial customer service documentation or tracking.
Okay, lots of spreadsheet work, basic reporting, standard comms.
Exactly. Tasks that AI, especially Gen AI for communication and summarization, is becoming very adept at automating or augmenting significantly. The need for a human to do the final check or handle complex exceptions remains, but maybe AI handles 80% of the initial prep work.
So an entry-level analyst role in, say, a big logistics firm or retail headquarters, spending their day pulling data and writing first draft reports, that profile is now highly vulnerable because AI can do a huge chunk of that preparatory work, reducing the need for as many humans by nearly half in those adopting firms.
That seems to be the implication of that huge 40% drop. But it wasn't only wholesale and retail.
Where else were the declines significant?
We also saw pretty substantial declines in the range of 15 to 20% reduction in junior hiring in those classic knowledge-intensive sectors you might have expected. Information, which includes tech, finance, and professional services.
So still big cuts there too, even if not quite the 40% in retail wholesale.
Right. It confirms that the impact of AI adoption on junior roles is widespread, permeating across many different types of white-collar work, well beyond just the core tech sector itself.
Okay, that's the industry picture.
Yeah.
Now, you mentioned a really surprising finding related to educational background. What did they find there?
Yeah, this is maybe one of the most counterintuitive and potentially worrying findings in the paper. They classified the university's workers graduated from into 5 tiers of prestige. Tier 1 would be your Ivy League, Stanford, MIT type schools.
The elite research university.
Exactly. Down to Tier 5, which represents institutions with perhaps very low resources or maybe even diploma mill characteristics. Tiers 2, 3, and 4 are the broad middle ground, strong national universities, good regional schools, etc.
Okay, so 5 tiers of university prestige. My first assumption, and probably most listeners' assumption, would be the better, more prestigious your university, the safer your job prospects are from automation. You pay a premium for that elite degree for a reason.
That would be logical assumption based on traditional skill bias change. But the data here reveals something else entirely. The researchers found what they described as a dramatic U-shaped pattern when looking at the decline in junior employment within these AI-adopting firms based on the tier of university the junior worker came from.
A U-shape. What does that mean? Where were the biggest declines?
The steepest declines in junior hiring drops of over 8% relative to non-adopters were seen among juniors who graduated from the mid-tier schools, specifically tiers 2 and 3.
Wait, the middle tiers, not the lowest tier.
Not the lowest. The biggest hit was to graduates from those solid, respectable, but not hyper-elite national and regional universities.
What about the elite grads, tier 1?
The decline for them was smaller. Still there, but smaller, around 5.5% relative decline. So they were somewhat insulated compared to the middle tiers, but not completely immune.
Okay. So where does the bottom of the U come in? What about the lowest tier, tier 5?
This is the most counterintuitive part. The smallest decline, in fact, a decline so small it was statistically insignificant, meaning effectively zero was found for graduates coming from the lowest tier, tier 5 schools.
So the grads from the least prestigious schools were the most protected from this AI-driven reduction in junior hiring. That seems completely backwards.
It does seem backwards at first glance. It raises this really profound and challenging question. Why are the middle-of-the-road graduates the ones who likely invested significant time and money into getting a respectable but not top elite degree? Why are they proving to be the most vulnerable to substitution by AI in these adopting firms?
Yeah, what's the explanation?
To understand this, we have to look at the interplay between salary and vulnerability. The paper shows, as you'd expect, that Tier 1 grads earn the highest starting salaries around $86,000 on average in the pre-adoption period.
Okay.
And Tier 5 grads earn the lowest starting salaries around $52,000 on average. Tiers 2 and 3 are in between, maybe 65, 75K range.
Right, so how does salary explain the U-shape?
The synthesis, the interpretation offered, is that AI adoption seems to be strategically penalizing this upper middle segment of human capital the most. Let's break it down.
Okay.
Elite grads, Tier 1, they earn a lot, yes, 86K, but they are likely protected by their perceived unique productivity and quality. They're hired for deep, abstract thinking, novel problem-solving, non-routine synthesis tasks that AI, even now, really struggles to replicate reliably. Firms are willing to pay that premium because the value they bring is seen as uniquely high and, for now, irreplaceable by AI. They possess the irreplaceable edge.
Okay, so unique talent protects the top tier despite high cost. What about the low-tier graduates, tier 5? Why are they protected?
They must be protected by the other end of the spectrum. Simple cost dynamics. Their cheapness is their shield.
Cheapness? How so?
Think about it. For certain junior roles, maybe ones that are extremely hard to automate completely, perhaps requiring some physical presence, or basic repetitive human interaction, where setting up complex AI infrastructure would be inefficient, using low-cost human labor at $52,000 might still be more cost-effective for the firm than deploying expensive AI systems or having highly paid senior staff handle those residual basic tasks. They hold the cost advantage.
Okay, so tier 1 is protected by unique value, tier 5 by low cost. That leaves the middle.
Exactly. The mid-tier graduates, the Tier 2 and Tier 3 segment, they seem to lack both the perceived irreplaceable edge of the elite talent and the significant cost advantage of the lowest tier. Their productivity is seen as, well, moderate, and their cost is moderate, 65, 75K.
And that makes them vulnerable.
It appears so. Their profile doing solid, standard, but perhaps more routine foundational white-collar work seems to overlap heavily with the capabilities of current generative AI, especially within large, sophisticated firms that can deploy AI efficiently. They become the easiest segment for these firms to optimize away when they decide to substitute capital, the AI investment, for labor.
So the thinking might be, if we're paying $75,000 for a mid-tier grad, and we find that AI can now do, say, 80% of the tasks we used to give them, that $75,000 salary starts to look like an immediate and relatively easy cost reduction for the firm compared to the $86K for the Tier 1 star or the $52K for the Tier 5 worker doing tasks AI can't easily reach yet.
That seems to be the economic logic suggested by this U-shaped finding. It's a stark warning that just having a decent college degree from a respectable university might not be the shield against automation that many assumed, especially for those entering the workforce now. #Tag7, broader implications and the institutional challenge.
Wow. That U-shaped finding, combined with the overall drop in junior hiring, this research moves way beyond just, corporate HR strategy or individual career choices. It points towards some really profound, long-term societal and economic implications, doesn't it?
Absolutely. If that bottom rung of the white-collar career ladder is being systematically eroded, especially for the broad middle class of graduates, we have to start thinking about the consequences for the entire economic structure.
What are some of those bigger consequences?
Well, first and foremost, there's the impact on upward mobility and inequality. Entry-level jobs aren't just first jobs, they're absolutely essential. They're the primary training ground where people acquire complex skills on the job, they build professional networks, maybe develop corporate loyalty.
And critically, they're the starting point for lifetime wage growth, right?
Exactly. Decades of economic research show that a huge chunk of a college graduate's lifetime earnings advantage comes from that within-firm advancement, starting from those junior roles and moving up. If you systematically remove or shrink that entry point,
You threaten upward mobility for a whole generation.
precisely, and you potentially start to hollow out the economic justification for getting a college degree in the first place, especially, as the U-shape suggests, if that degree is from a mid-tier school whose graduates seem most vulnerable, the whole college wage premium could come under pressure.
And connecting this to the even bigger picture, the macro economy. You mentioned earlier AI is an efficiency tool, but it's capital intensive.
That's right. AI drives massive efficiency gains, potentially boosting productivity and profits. But machines, algorithms, they don't consume goods and services.
Consumption power comes from people having jobs and wages.
Exactly. Broadly distributed wages are the engine of demand in our economy. So if the gains from AI adoption flow disproportionately to capital owners, the firms, the shareholders who own and deploy the AI, while simultaneously displacing junior labor or suppressing entry-level wages.
Then overall consumption power for the majority of the population could shrink, even if the economy is technically more productive.
That's the potential paradox. You could create what some economists worry about, a kind of vicious cycle of high efficiency.
How does that cycle work?
You get ever higher production efficiency,
Yeah.
maybe soaring corporate profits for a concentrated group, but the majority of people facing stagnating or shrinking entry-level income opportunities can't maintain their previous levels of consumption.
Which leads to
Issues like overcapacity companies can produce tons of stuff very efficiently, and underconsumption people can't actually afford to buy all the stuff the efficient machines are helping produce. In the long run, if wages aren't broadly maintained or supplemented somehow, the whole engine of capitalist growth, which relies on mass consumption, could stall.
So this isn't just a technology problem or a labor market problem. You're saying it's fundamentally an institutional challenge. It requires a strategic policy response.
I think that's the unavoidable conclusion from findings like these. The core challenge isn't whether we should develop or use AI. The efficiency gains are likely too large to ignore. The real challenge is how we use our institutional levers, what economists sometimes call secondary distribution mechanisms, to ensure that those AI-driven efficiency benefits are shared broadly enough to maintain social stability and economic dynamism.
What kind of institutional levers are we talking about?
Well, commentary around this paper and related research often points to a few areas. One is looking at capital taxation, finding ways to capture a share of those potentially highly concentrated profits from AI deployment.
And use that revenue for?
Reinvestment. Maybe into things like a universal basic income or stronger social safety nets or wage subsidies policies designed to maintain aggregate demand even if traditional job structures are changing.
So redistribution is one part. What else?
Another crucial focus has to be on deep investment in education and retraining. But not just more of the same education. The emphasis needs to shift radically away from rote learning and performing routine cognitive tasks, the very things AI seems to be substituting for,
And towards?
towards developing uniquely human skills. Things like complex, critical, and creative problem solving, emotional intelligence, empathy, collaboration, interdisciplinary thinking and synthesis, skills that are complementary to AI, not substitutable by it. Our education system needs to adapt, arguably much faster than firms are currently adopting AI.
Okay, so those are the big policy ideas. But for the listener right now, the individual worker or the student maybe facing this kind of structural shock that they can't personally control. What does this data mean for their strategy? How do you survive or maybe even thrive when that traditional, predictable career ladder seems to be disappearing, or at least the bottom rungs are?
It's a tough question. But I think the first step is acknowledging the shift. You
Yeah.
probably have to abandon that old fantasy of a fixed, predictable career ladder laid out for you.
The path from entry-level analyst to VP over 20 years is maybe not the default anymore.
It seems less likely to be the default, especially in these large adopting firms. The future career might require what some analysts are starting to call a nomadic mindset.
A nomadic mindset. What does that entail?
It means recognizing that your career path might be less linear, more project-based, requiring constant learning and adaptation. You need to be proactively seeking out new skills, learning new tools, including how to leverage AI yourself, maybe moving across different domains or functions within an organization or even between organizations to find where your unique human value lies. You can't just rely on a single predictable track defined by your initial entry point.
So constant learning, adaptability, looking for where you can add value that AI can't.
Exactly. Individual strategy has to focus relentlessly on developing and demonstrating those capabilities that AI demonstrably struggles with. What are those?
You mentioned complex thinking.
Right. First, the highest level cognitive skills. Deep thinking, tackling truly novel and complex problems, integrating knowledge across different domains. AI is fantastic at synthesizing existing information and following patterns, but it's generally terrible at formulating entirely new questions, dealing with true ambiguity, or generating genuinely breakthrough ideas. That's still human territory.
Okay, high-level cognition. What else?
Second, and maybe just as important, are the uniquely human soft skills. Things like empathy, nuanced communication, building trust and relationships. AI can maybe simulate conversation, but it can't build genuine personal trust. It can't navigate complex organizational politics. It can't effectively manage conflicting human emotions or inspire a team.
And those become more important as you move up.
Absolutely. Those relationship-building, trust-based skills are often the primary tasks of senior employees and leaders. So making yourself indispensable in this new environment likely means focusing intensely on mastering both that high-level complex thought and these deeply human interaction skills. Those seem to be the bottlenecks where humans retain a strong advantage.
So we take a really deep dive today into this preliminary paper by Hosseini and Lichtinger, looking at their rigorous data on AI adoption and workforce changes. I think the key takeaway is pretty stark, isn't it?
It really is. Generative AI seems to have made its first significant structural cut, not perhaps where many expected, not primarily at low-skill manual work, at least not yet in this data. Instead, it's hitting the white-collar career entry point.
Right at the start of the professional ladder. It looks like it's eliminating or at least significantly shrinking that bottom rung. And that's driving a fundamental shift in how these large corporations recruit and manage their talent, seemingly focusing much more on either the highest end unique talent or the lowest cost options and squeezing that middle ground.
And, this structural shock AI substituting for mid-tier, routine cognitive entry work, it's not entirely without precedent. It feels eerily analogous in a way to another painful economic transition we've lived through.
What do you think of?
Think back to the big wave of manufacturing outsourcing that really hit advanced economies hard starting in the 1980s. The trend that hollowed out industrial communities created the Rust Belt in the U.S., for example.
Okay, yeah. That displacement was huge.
It was. And it was largely caused by capital and labor shifting overseas, chasing lower wages. But the difference now with this AI wave is profound.
How so?
The jobs aren't primarily being outsourced to a low-wage country. The routine cognitive tasks are being replaced by capital, by the AI systems themselves domestically, right here at home within these advanced economies.
So the competition isn't workers in another country, it's the algorithm running on a server down the hall, metaphorically speaking.
Pretty much. The future of work, or at least a significant part of it, is arriving very quickly. And this research suggests it's actively reshaping the structure of the white-collar workforce, forcing this kind of concentration of value at the very top, unique skills, and maybe the very bottom, low cost, while potentially displacing the middle. The distribution of AI's benefits remains profoundly in question.
So if you're listening to this, maybe planning your career, thinking about your kids' education, or even running a business and considering AI adoption, the ultimate question this research leaves us with is this. Given that these efficiency gains seem to be concentrating wealth and the displacement at the entry level is demonstrably real and happening fast, what institutional and policy changes do we as a society need to advocate for? How do we ensure that AI's vast potential productivity gains are actually converted into shared prosperity rather than just widening the economic divides and potentially destabilizing the very foundation of the modern career?
That's the multi-trillion-dollar question, isn't it? What are we going to do to make sure this powerful technology benefits everyone?
Something important to think about.
That's all for this deep dive. We'll see you next time.